Hello, welcome back to another episode of Saving DMV. I am Hannah Clancy-Thompson with Arla Real Estate. Today we're going to be talking about competing in multiple offers and competing against cash buyers. So when you think about a cash buyer, which we have a lot of in the DC metro area, what is it about the cash buyer that makes them special? And what that is less risk of not closing because they have the money, and no presumed change is going to happen due to the appraisal or some kind of inspection that would affect your financing. So knowing that about cash buyers, you can try to structure your offer in the most competitive way to compete against them. What is the first way you can do that? Well, you could offer more money. If a cash buyer is offering up to, say, $750,000 on a property and you offer $800,000, the fact that you have a loan might not be that big of a deal because the extra $50,000 makes it worth the risk. That is the obvious first way you can be a cash buyer. One thing you can do is do a pre-inspection. If you can pre-inspect a property, then you can try to see what issues there are and take those into account so that you can write the strongest, best offer possible. And if you have to do an actual home inspection on your contract, you can do a right to cancel only home inspection, where basically you say, I'm not going to ask you to do any repairs. I'm not going to ask you for money. I just want to be able to walk away if the house is falling down. Another thing you should strongly consider is whether or not you can waive your appraisal contingency. One of the big issues in multiple offer situations is that houses will go for more than they are probably really worth in terms of an appraiser's valuation of the home, what can be proven based off of sold comps in the neighborhood. And because of that, a cash buyer can say, that doesn't matter, I don't need an appraisal, so I'm willing to pay this amount of money and I have the cash to do it. If you can waive the appraisal, then you're in a great situation. One of the things you have to be willing to do, though, if you're waiving the appraisal, is you have to be willing to pay the difference between the appraised price and what you're offering in cash. And sometimes that inability to do so makes it so that you can't really compete against a cash buyer who's willing to offer more. Going into this, it's obviously there's a lot more that kind of goes into the background of understanding the appraisal contingency and what you're willing to pay. So you're going to have to talk with your real estate agent more about this, but that's kind of like the nuts and bolts of another way that you can make yourself more competitive is getting rid of the appraisal contingency that a cash buyer doesn't need to include. All right, so another thing you can do is provide the seller with more information about your financial picture. Show them that you have the funds and the financing available to, hello Ati, to close this deal. And so some of the ways that you can do that is go to your lender and ask them, can you write a specific letter that outlines what my credit score is, what my debt to income ratio is, and really talk about your financial strength and ability to do your purchase, that the mortgage itself is really a no-brainer. Another thing you can do is complete the financial info form. It's a form that is an optional form, and if you've seen my series on how you write an offer, then I mentioned this form. This is an optional form where you disclose information about your financial strength and picture that gives the seller a window into your ability to pay and can put their mind at ease that you are able to close this deal. Sticking with options of things that your lender can do, you want to try to keep any contingency dates as low as possible. So for instance, if you have an appraisal contingency or a financing contingency, you want to make sure that the timelines for those are as short as possible. So if 14 days for an appraisal and 21 days for financing is okay in a standard market, maybe you can get those numbers down. Maybe there's a way to shorten those contingency periods. I one time had a lender do a 2 business day financing contingency just so that we had a chance for him to review the package and make sure that everything was going to be fine. But in reality, most of the work had already been done. The lender had already sent their pre-approval through the underwriting process. They had already been underwritten and ready to go. All of their paperwork was in. So it removes some of that risk and allows the lender to move more quickly. So talk to your lender about what you can do to shorten the timeframes and to do more of the work up front before you even write the offer, so that your offer and financing is structured, ready to go, and the most competitive it can be. Okay, this one's kind of cheating, but one way to beat cash is with more cash. What I mean by that is you might be able to get a smaller loan. Maybe you don't have all of the cash you need to purchase the house that you're going to get. Maybe you want a loan of, say, $300,000, but you're not getting a $750,000 mortgage. You're only getting a $300,000 mortgage. And that's going to be obviously easier to attain because you're not going to have any appraisal issues on a smaller loan like that. You're already bringing a big chunk in cash. And so that really changes the picture. Even though it's not technically a cash offer, it's very close. Okay, let's say you don't actually have the cash. One thing you can do is sell your house first, then purchase. You can use all of the proceeds, or most of the proceeds from your sale, as cash towards your next payment, or just provide a bigger down payment and a smaller loan. It's sort of like the last example of having a smaller loan. One way to get that extra cash is to get it from the sale of your home first. Now, obviously, you have to be able to time this appropriately, and there's lots of different things that go into making that possible, such as where are you going to live? Are you going to stay in the house? Are you going to do a pre-settlement, occupancy, all of those sorts of things. And we could get into that in more detail, but just know that that is another way you can do it. All right, so winning in a competitive situation is hard to do. It's hard to do when you're going up against cash. That's just the reality of the situation. But remember, when you're writing an offer, it's about price and terms. And so while some people are willing to waive everything, others are not. Those that are willing to make it easiest on the seller will get there first. So the last thing that you can probably do in this situation is find out what the seller wants or needs and provide that to them. If they need a really quick close, if they need to be able to stay in their home longer, if they're building new construction and they want to be able to wait to move out until it's done and you're willing to be that flexible, you could be the person that they want to work with. So there are ways to use terms to your advantage, even if you don't think that you can win on just straight sale price alone, etc.